following is a technical analysis on Numinus Wellness Incorporated, a company of the psychedelic sector, and I contemplate these stocks as a compelling high risk, high reward ratio, particularly within the psychedelic sector as a whole, which is inherently subject to an insane, robust amount of regulation intertwined with pure legislative fundamentals that are poised to unfold over the upcoming years. And it is not inconceivable that those with a strong knowledge, deep knowledge of the legislation arena that could foresee concerning potential for wide-scale legalization, which would amass substantial wealth and gains from their investment here. But again, that is a very hard thing to determine here. And I have a few of the main components of the psychedelic sector that I will keep an analysis on by a chart request that I had from a subscriber. And here we are on a potential breakdown in the near term. We put in we had this nice clean divergent low. We had positive and bullish divergences really constructed amongst all three technical momentum indicators there. You can even have make a case for a bullish falling wedge pattern. We needed a breaking. That was the catalyst for this big wave of 81% in gains there. And here we are in the near term. We have this primary reactionary downtrend line off the May 2023 reactionary lows right across the board there, continuous now with near-term divergence, bearish and negative divergences really amongst all three technical momentum indicators with confirmed bearish crossovers on the moving average convergence and oscillator with the already red candle print data prints below the zero line thresholds on the oscillator histogram there. And this looks like a definitive breakdown off this primary uptrend line off the end of May reactionary lows there, and that could spell a significant decline if we take out primarily this 0.1624 price support corresponding with the 50 exponential moving average and the 50-day moving average hovering up above with an unfilled gap down below. So if we pop and snap this level, take this level out, I would only suspect a further wave of selling down to the 13.98 price support and then ultimately the 13 flat cent resistance there. Additional targets there, especially if you're long-term investor, dollar cost averaging down. You take away the lines here, and this has been a nothing but a complete, what you would call downtrend since the inception in IPO of this company here. So it's been in a pretty big wave to the downside, correlating with the 50 weekly moving average being rejected here. We had for weeks on end now, months on end here, multi-month resistance. And it has been reflected heavily since that key inflection point. So there's an unfilled gap. And again, these were GSP levels that you dollar cost average, whether you short this stock for a pronounced profound move down to that 13.98 for another 16% crash, down to 13 price support there. If we overshoot that gap, support there for a 22% crash, and then hardly any resistance down below. But that is one of the sectors, huge fully mapped price indication around this range as well, whereas bull traders, long traders really need to defend this key level at all costs to hone in on that back to a re-challenging of that 21 price resistance there. So we'll see what happens. There's a pretty close as a sell signal as you can possibly get there on the daily interval. And here we are on an analysis of Compass Pathways, a company of the healthcare sector, medical sector, and psychedelics. And here we are. We're dancing on this 873 price support, pretty significant support there, zone with this bouncing right out this potentially on a re-challenging of this primary reactionary high downtrend line off the December 2021 reactionary highs there. Big, pretty key inflection point there. We have back tested this key 873 price resistance corresponding with the 50 exponential moving average. And again, nice dollar cost average zone for move up above, potential move up above. If we take this level out, if we snap this level, then we're going to ultimately take out the 50 exponential moving average and a re-challenging of the 50-day moving average, whereas you already have bearish crossovers here on the moving average convergence and oscillator with, again, another red candle print below their oscillator histogram. So again, these are some key inflection points, dollar cost average down. That would be a break, I think, a prolonged move of selling if we take that level out for another 13.4% crash down to 730 price support, which will correspond with the primary uptrend line there for an 18% crash off the May 2022 reactionary lows. And that would be a pivotal inflection point to pay attention to, especially if we go on for a re-challenging of this primary uptrend line there. So we'll see what happens as far as any more. But again, dollar cost averaging, these are your key levels to hone in on if you're bullish on the psychedelic sector. And I'll take you on to the next company, MedMen Enterprises Incorporated, another company of the psychedelic sector here. And we have a very well-defined primary reactionary high downtrend line off the September 2022 reactionary highs, really all across the board here. with symmetrical triangle looking pattern. This primary uptrend line off the May lows. We put in a nice clean divergent low off this bullish falling wedge pattern. We ended up breaking out. That was the technical catalyst for this much larger move on a revisit back to that primary reactionary high downtrend line for 101% in gains there. And here we are starting to break down below this primary reactionary uptrend line corresponding with the 50 exponential moving average and 50-day moving average starting to get tested. Now, we did back test this 0.0198 price support there, and we ended up, bull traders, long traders ended up defending it pretty heavily there. And again, this would offer an additional objective short trade entry for the risk reward ratio to move to the upside for prolonged moves down to that next target, 0.0174 for a 22% crash, down to 0.0149 for a 34% crash. Bull traders, long traders, they want to see a final breakout of this primary reactionary high downtrend line, and that would put in a significant amount of long trades and leverage, in my opinion, with a pretty extreme rush in short covering if that were to occur, and then a much larger move to the upside. That is a multi-year resistance level that needs to be taken out, and which would again potentially change the course of the 250-day moving averages, where they're honing in on each other, and would potentially put in a golden cross continuation pattern for a much larger move to the upside. But again, if we get rejected here off these the primary downtrend line here, these are your key levels to dollar cost average. Bring down the averaging if you're again very bullish on the psychedelic sector as a whole for a more prolonged move to the upside if and when we get to that get to those key inflection levels. Oh, it's a mixed 50-50 bag all across the sector there and what I see. And if I'll update you, I'll keep you updated if I see any more significance on the charts. Those are some potential small aggressive short trade ideas and potential long trade ideas as far as the dollar cost average scenario unfolds itself. And especially if we break out of this key inflection point, I'll hone in and give you on some targets if I see any more significance here in the charts.